Well, the story continues at Seritage Growth Properties, and this week we had two pretty major updates out of the company. Firstly, we had a press release saying that Seritage have recently repaid $100 million of their loan to Berkshire Hathaway, which leaves about $1.34 billion in debt remaining to Berkshire. And secondly, Seritage announced their second quarter 2022 earnings, which gave us a few kind of really key updates around what's happening at Seritage. Firstly, we got the usual updates in terms of leasing activity and some of the redevelopment projects that the company has kind of got in progress at the moment. But more importantly, particularly as Seritage switches from a redevelopment story to more of a liquidation story, we got some nice updates on basically how Seritage is progressing so far with liquidating their real estate holdings. About 6 weeks ago now, Seritage announced that they're going to have shareholders vote on a proposal to liquidate the entire company. It's going to need about 2/3 shareholder approval to go through that process. But in that filing, they actually said that they're probably going to have about 50% of the real estate value of Seritage already on the market kind of pre-vote. So they've already really got the ball rolling with selling some of the properties at SRG. It's starting to generate cash, and this Q2 earnings report gives us a really nice insight into how that's going for Seritage so far. So in this video, I want to share some of the key updates out of Seritage around leasing and property sales and debt repayment and so on. I want to share some of my thoughts on what's happening at SRG at the moment. And there's also a part of this earnings release around a long-running lawsuit that's been happening with Seritage and Sears, and looks like we might be getting pretty close to the finish line with a potential outcome with that one. It's been hanging over Seritage for many years at this point, so also want to talk through that a little bit in this video. So that is the topic for this one. If you do enjoy it, please sure to hit like and also subscribe to the channel if you are new here. But for now, let's get straight into this update on SRG. Okay, so let's start things off with the debt repayment news out of Seritage. This press release came out on the 8th of August, which was a day before they actually reported their Q2 earnings. And the numbers that we got in that Q2 update took us through to the 30th of June 2022, and there have of course been some pretty substantial updates since the end of June. There's been more properties sold. This debt repayment happened after the end of June, so if we look at kind of the balance sheet and financial statements that came out of Seritage in their earnings report the next day on the 9th of August, that actually isn't going to include this debt repayment and some more recent property sales and so on. But in terms of the loan repayment that they did make, they put out a press release saying they have made a voluntary prepayment of $100 million towards its $1.6 billion term loan facility provided by Berkshire Hathaway Life Insurance Company of Nebraska. With the prepayment, $1.34 billion of the term loan facility remains outstanding. The prepayment will also reduce Seritage's total annual interest expense related to the term loan facility by approximately $7 million. Now, debt, again, has been one of the main things hanging over Seritage. They are not a cash flow positive company, but they have a lot of net asset value relative to their market cap. And initially, when Seritage first took out this $1.6 billion loan, the full $1.6 billion was due in July 2023. Now, that equation has changed somewhat. We now have half of that loan still due in July 2023, and the other half, about $800 million, due in July 2025. So they've been paying down a reasonably significant amount of the debt that is due next July 2023, but that still leaves about $540 million to go in order to meet that July 2023 debt repayment. Hopefully that's going to be made a lot easier as they continue to really speed up these property sales, which we'll talk about in a sec. But that's the current debt situation as it stands today. Okay, let's jump now to the Q2 earnings update from Seritage and talk through some of the highlights there. Now, as usual, the first kind of chunk of highlights from Seritage in this earnings release are really related to their leasing activities. And that used to be something that I would pay a lot of attention to. Obviously, the name of the game previously at Seritage was to try and get to a point where they are cash flow positive, generating substantial rental income from their portfolio. They are a real estate investment trust, or at least they were. That has changed. And the idea was they would have these cash flow generating properties and they could pay substantial dividends and so on. Now that Seritage has become more of a liquidation type situation, the leasing activity will be less important. But if they can have fully leased up properties, that does potentially make them easier to sell to buyers versus just an empty property. So very quickly on the leasing activity that did happen, Seritage signed 13 leases covering 211,000 square feet at an average annual rent of $15.52 per square foot. And that rental rate per square foot does vary quite a lot depending on the property. If you want to read some more of the details, I'll put a screenshot up here. Just pause the video and read that for a few moments if you would like. And they also mentioned that leases subsequent to the quarter ending were 8,000 square feet of out parcels at multi-tenant retail assets at a base rent of $21.88 per square foot, 4,000 square feet or $2,000 at share of ground floor retail at premier assets with a base rent of $90.87 per square foot, and 2,000 square feet of second floor office at premier assets with a base rent of $72 per square foot. An additional 25 leases are under negotiation, representing over 300,000 square feet at a projected base rent of $20.54 per square foot. And finally, in terms of leasing activity, they brought 11 tenants online, representing 273,000 square feet and $3.4 million in annual base rent, or $3 million at share. Okay, so now let's get into the property sales, which for me, this is the real big update out of Seritage. The, rental income is nice to have, but, $3 million in annual base rent that kind of happened in the quarter is really peanuts relative to the, more than $1 billion or potentially a few $1 billion in real estate that Seritage are going to look to sell over the next couple of years. So in terms of property sales, they generated $163.4 million of gross proceeds through their disposition activity, which is just selling properties, during the 3 months ended June 30th, 2022. Subsequent to the quarter ending, the company generated $102.3 million in gross proceeds, and the company had additional asset sales under contract for anticipated gross proceeds of $260.8 million, subject to buyer due diligence and closing conditions, and is currently negotiating sales, evaluating bona fide offers received, and marketing or about to bring to market over $1.2 billion of properties for sale at estimated fair value, which would provide sufficient proceeds to qualify the company for the extension of its $1.34 billion term loan facility, assuming all deals closed prior to July 2023 as anticipated. So some pretty material property sale numbers starting to come through, and some very material numbers in terms of how much real estate is now available for sale. And my estimates, and I've done valuation videos for Seritage on the channel if you want to go and check out those older videos from earlier in the year. In my estimate, Seritage probably has somewhere in the $3 to $4 billion range in kind of real estate assets. Obviously a little bit less now that they've sold some. So to see about $1.2 billion coming onto the market even before they have this shareholder vote to liquidate the whole thing is a pretty nice sign. And of course, the faster they can generate cash from those property sales, the quicker that they can get that debt to Berkshire paid down, and hopefully the quicker they can start to distribute cash out to shareholders as part of the liquidation process, assuming that that is approved at the shareholder vote at the annual meeting coming up soon. Now, if anyone really wants to dig into the details on those property sales, over the past few quarters, Seritage has started publishing a financial supplement document with their quarterly earnings. And in the latest financial supplement document, they actually list out every individual property that was sold. So if you want to go and look at, some of my old valuations or whatever for some of these properties and compare that to some of the properties that were sold, you're more than welcome to go and do that. That spreadsheet is publicly available. What I would say is it is a little tricky with some of the properties that were sold this quarter. For example, one of the properties listed is 195 North Broadway, Hicksville, which is actually one of their premier developments, and I've got that listed as a partial sale. So it's probably not going to be super easy to take a valuation from some of those older videos and scale that down for partial sales and be all that accurate. So that might be something that I'll do a more detailed video on maybe in another quarter or another couple of quarters when we've got more properties sold. That should give us a much better indication of how those valuations line up relative to the real property sales data that we'll start to see come in from SRG. Now there are a few pretty significant factors that have turned a lot of people off from Seritage over time. They don't generate positive cash flows. There's been a lot of management turnover. They're pretty heavily indebted, and they also have this long ongoing lawsuit between Seritage and Sears to do with when Seritage was first spun out of Sears before Sears went bankrupt. And we got actually a pretty important update on that in this latest earnings update from SRG. Of course, lawsuits, it's always a big unknown in terms of what potential liability there might be for someone like Seritage in this case. But we got a little more certainty again as this, progressed quite significantly. So the key point here is that on August 9th, 2022, following the mediation, all of the parties to the litigation and certain of the parties to the shareholder litigation, to which Seritage is not a defendant, entered into a settlement agreement pursuant to which, pending final court approval, the defendants will pay to the Sears estate $175 million, of which Seritage defendants will contribute approximately $35 million in exchange for dismissal of the consolidated litigation and for the full and final satisfaction and release of all claims in the consolidated litigation, including in the case of the Seritage defendants, any and all claims between the Seritage defendants and the Sears estate in the Sears bankruptcy proceeding. The settlement is subject to final court approval following notice and an opportunity for objections, if any, at a hearing scheduled for August 31st, 2022. As previously disclosed, the company remains in active litigation with its D&O insurers concerning potential coverage for the consolidated litigation, and any amounts received from the insurers will offset the Seritage defendants' approximately $35 million contribution. While the company believes that the claims against the Seritage defendants in the consolidated litigation are without merit, the company has entered into the settlement without admitting any fault or wrongdoing, in order to avoid the continued imposition of legal defense costs, distraction, and the uncertainty and risk inherent in any litigation. If the settlement does not receive final court approval, the company intends to defend against the claims in the consolidated litigation vigorously. The company has reserved $35 million based on the company's contribution to the proposed settlement, subject to final court approval of the consolidated litigation. This estimate is recorded as litigation reserve in the condensed consolidated statements of operations during the 3 and 6 months ended June 30th, 2022. So lots of lawyer speak in that bit of the update from Seritage. But basically what we need to know is that Seritage looks like it's probably going to be liable for about $35 million, subject to court approval. They've kind of put that $35 million reserve as a liability on their balance sheet, if you want to look at the latest SRG balance sheet. And again, we might finally have some certainty and have that, big thing, that big cloud that's been hanging over SRG finally out of the way. So where to now for Seritage? Well, in my mind, there's really only a few key factors to keep an eye on now that Seritage is looking like it's pretty likely to get liquidated. Firstly, we have got the shareholder vote coming up at the annual meeting soon, and if we look over to Simply Wall Street, we'll see that about 75% of the company is owned by the top 25 shareholders. If you want to check out that exact report, I will leave a link in the pinned comment to that one, and you can get a 14-day free trial and 30% discount using that link if you want to as well, but that will take you straight to this Seritage ownership report. And we require 2/3 shareholder approval. So those top 25 shareholders will have a big influence, particularly the number one shareholder being Eddie Lampert. But we already know that Eddie Lampert is going to vote in favor of a liquidation. That news has kind of come out of Seritage already. So that is the first thing to keep an eye on. The second thing really is just the updates with property sales. They are hopefully going to get very material over the next couple of quarters. And we want to make sure that they're selling properties at a pretty significant pace and that the price they're getting for those properties hopefully lines up pretty nicely with some of the valuation work that's been done in the past, and that will, allow them to get to this $18.50 to $29 per share distribution type range that they have stated in previous updates. But of course, initially, a lot of that cash will be used to repay debt to Berkshire. I expect most, if not all of that debt will probably be paid back before Seritage even think about distributing cash to shareholders. So a couple of key updates there out of SRG, and like I say, the story kind of continues on with this one. It's one that I, again, will continue to keep an eye on. If you've got thoughts on it, definitely let me know down in the comment section below. If you enjoyed the video, be sure to hit like and subscribe to the channel if you are new here. But that's it from me for this one, and I'll see you in the next video. Cheers.